Back in the action here once again. Time to get back to work. Holidays over. Of course, happy Veterans Day to all the vets out there. But hate to break it to you guys, long weekend is over. It's time to roll those sleeves up and get back to work. It's Tuesday evening after all. It's November the 12th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time, great to have you here with me because I help traders find high-quality setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. My job tonight is to help you guys find the best levels of support and resistance for tomorrow, the best entries and exit setups for tomorrow. And we can't forget about this, very, very important. I want to make sure you guys don't make those common rookie mistakes and get trapped into those losses in tomorrow. That's Wednesday's trading session. And we have quite a bit to talk about tonight on the video. We got a lot to catch up with, right? Had a day off yesterday, get some big news coming tomorrow. We'll talk about how that will affect the markets. We'll grab some charts as well. We get some oil, some S&P, some NASDAQ, and of course that yellow metal, the gold futures. I'm going to start tonight though first with a black gold, the Texas T, the crude oil futures. Oil is back to its range-bound self again. We get some triangles. We get some rectangles. That tells me what? We're buying low. We're selling high. We're fading breakouts. But there's one big clue on this chart that really kind of pinpoints exactly where I want to be buying low for tomorrow. Let's grab that chart here over on the oil as we kick off this third week of the month of November. Hope you guys, again, had a great Veterans Day out there. I know I definitely did, but it's great to be back here with you guys once again. What do we know about the oil market right now? We know the market overall is range bound, right? The market runs up. We, double top, triple top, and, again, you can kind of see here, I've got this, right, triangle drawn up here, right, for this trading range. Now, we definitely know this market has a bull bias to it. We know it's into a range. So really, when I have a range on a chart like this, and whether you want to call it a triangle, right, or you want to call it a rectangle, basically this tells me I want to buy low, I want to sell high, and I want to avoid the middle. Now, in this particular example, right, again, we know we want to buy low, we want to sell high, but really one very, very big clue, actually two very big clues, has to do with the triangle, right? The triangle really is a big advantage in a range-bound market because of the swings, right? That is a really big clue. Those swings, you'll notice, right, in a triangle environment are really powerful. That's one big clue we'll talk about tonight on the video. But you'll also notice that big, strong shot down, and that gives us that measured move or this measured correction or measured pullback, however you want to describe it. And I'll tell you right now, when you put those two clues together, the triangle and the measured move, it really has me paying attention to that 56 and a quarter area to buy it back up in. So I'm looking to be a buyer right now on this oil. I want to stay out of the middle, buy low, sell high, and tonight we'll talk about if we can get down in that battle zone down there. I'm going to talk about three of my favorite patterns to watch for entries. So if you're trading crude, you definitely want to make sure you stick around on that. I'll also talk about if this market keeps ripping higher tomorrow. If we don't get the pullback, where's our objective? And we'll talk about the best ways to trade it if we don't get that deep pullback. So again, if you're an oil trader, you definitely want to stay tuned on that. I've got my eyes on that 40 to 15 level, and we're going to talk more details tonight of entries and exits right on this video. How about some S&P? S&P, as you can see, is overall bullish. I don't think there's any question about the overall bullishness of this market. It's tough to be at all-time highs and be a bear market, but we do have one very big problem, and that is a very strong move, right, coming down off of that high. Now, anytime we get a real strong move in one direction, we oftentimes see another leg in the same direction. So we know we're bullish. I want to be a buyer on this, but I have to respect the strength of that move going lower. You can easily see I've got some great levels of support I've found here. I definitely want to be a buyer, but I'll tell you, I don't want to just blindly buy this market right now. I've got some resistance in my way, and again, I got that strong move down. That strong move down tells me there is one Very particular, very specific, very reliable setup I'm waiting here for tomorrow. I'm looking to be a buyer here off of that low. And I'm also watching for another leg lower, as I mentioned earlier, because I'll bet there's a lot of buyers waiting down there inside that secondary battle zone. And of course, that will definitely mean a bear market overall. But as you can see, that we get a big old channel out there. And so we'll talk about tonight, we'll talk about how we're going to buy the shallow pullback, right? How we're going to buy that deep pullback. And we've also got some big news tomorrow. If you're an S&P trader, it will affect the S&P, and we'll talk about how that news may affect us and how we're going to play it tomorrow as well. S&P traders, make sure you stick around for more on this. NASDAQ is very similar here to the S&P. You can see there's no doubt about it, right? We're at all-time highs right now, right? We give a little kiss to the 8,300 big round number. We know we're overall bullish. That's not the question. The question is, though, is do I want to buy into that much momentum going lower, right? We know we can see the markets pushing higher here. It's easy to see we are pulling back to the low of that channel. I'd like to be a buyer, but again, anytime I see that type of strength in one direction, we're going to usually get another leg. Now, I've got that same entry pattern on that we talked about for the S&P. I'm looking to be a buyer down here in this first battle zone, but I'll tell you right now, I wouldn't be surprised if it runs all the way down into that secondary battle zone at the low of this larger channel. I still want to be a buyer down there, but I'll tell you right now, there's one thing we don't want to do as we run lower. I'm going to talk about the NASDAQ here. If we do get that run lower, there's one thing down there that will tell me I cannot buy this market any longer, and we'll talk about that right on the video tonight. I want to be a buyer on this, but I've got to tread lightly here because, again, we've got that bearish momentum. And what if I'm wrong? What if the market rips higher here again? We'll talk about the best patterns. I've got two patterns to watch for. You know, if for some reason I'm wrong about the pullback and it keeps on ripping higher, we'll talk about how to trade that as well. So not to worry if it goes up, down, or sideways. I'll have you guys all covered up here and ready to go for tomorrow. How about some gold? The yellow metal here tonight. I think it's pretty easy to see the equities are pushing higher. Meanwhile, the metal here, the gold, right, the yellow metal is pushing lower. Lower lows, lower highs. You can see this is a pretty obvious channel, right? I think a lot of people will see this channel and they're going to want to sell off the high of that channel. I think what's even more obvious is that strong move down into that trading range. And what does a range tell us? Yeah, buy low, sell high, avoid the middle, focus on failures. So here we are right now. We're way up in the highs right now, and I'd love to be a seller up here. But I'll tell you right now, there are two really big problems with trying to just sell this thing right now. You can easily see the pendulum swing. They almost got that. The pendulum swing is not the problem that I can see right now. What I do see, though, is the strength of this move going higher, right, and that trading range. I've got two big red flags right now. I do want to be a seller on this gold. I definitely don't want to be a buyer on this yet, but I do have to be very careful. There's two problems I see, and tonight on the video, I'm going to talk about how my plan is to trade around those two issues. At the same time, what if they hold and run? What if we get that short covering rally back up towards that 1500? Who knows? I do want to be prepared for that tomorrow as well. We'll talk about how to be a buyer, when to know it's safe to be a buyer. Most importantly, I'm going to teach you here tonight how to avoid a very common trap that is likely setting up here right now on that gold. So make sure, if you're a yellow metal trader, make sure you stick around for the entire video here tonight. I get it all ready. We're all ready to go. We're back from the holiday. Got the gold, the NASDAQ, the S&P, and of course, how can we forget about that black gold, those Texas tea, the crude oil futures? Before we jump into the video tonight, though, as I always want to remind you, make sure you never miss another great video by joining our mailing list. Getting on the list is very, very easy. All I need is your name, your email address, and then hit that subscribe now button. And then don't forget, make sure you check your email, because I'm going to send you a welcome email. Inside that welcome email, there's a verification link, and I need you to hit that verification link to give me approval to keep on emailing you every evening when this newsletter goes live. The easiest way to make sure you're always on top, right, of this newsletter is to join our mailing list. All I need here is your name, your email address. Hit that subscribe now. Check your email inbox, because as always, I'm going to send you that welcome email, and you got to hit that verification link. And then how about some questions here tonight? I love answering all those questions in the comment section below. So how can I make this video better for you? What don't you understand about the video, right? How can I fill in the blanks? Maybe you've got questions about the strategy or the markets or the charting software that we're using. Whatever questions you have, drop those questions in the comment section below for me. Or maybe how about some feedback? Right? What do you love about this video newsletter? I want to do more of that then. What do you hate? If you were in charge over here, what would you remove from this video newsletter? Guys, drop me some comments in the comments section below. Let me know what you love. Let me know what you hate. I'll tell you right now, I've been doing this for a very, very long time. You probably have noticed I've been doing this newsletter for over 10 years here at School of Trade, and I haven't been able to keep it running so long without listening to your feedback. What do you love? What do you hate? Drop me some comments in the comments section below. And then don't forget, while you're down there, hit that thumbs up button for me, will you? Yeah, if you guys like this newsletter every evening, if you tune in every evening, right, help me promote this channel. Hit that thumbs up button for me. That would mean a lot to me to show your support for this video newsletter. So as always, drop those questions in the comment section. Hit that thumbs up button. And then don't forget, right, you can always call me here in the office. I'm always here. If you ever have any questions, don't be afraid to pick up the phone and call me toll free using that toll-free phone number in the upper right-hand corner. I promise there's no call centers, no phone tree, right? No automated chat bots, just the good stuff. My wife Megan and I are always standing by to answer the call, answer all your questions, save you some time, and save you some money along the way. So call that toll-free phone number if you have any questions along the way. In the meantime, though, let's get this party rolling here. Always appreciate you guys hitting that thumbs up button for me. So thank you so much on that. Let's check the calendar here for the rest of the week. It's a short week, of course, because Monday was the Veterans Day holiday. Anytime Monday is a holiday, everything gets kicked back a couple days, right? So what's on Tuesday gets on Wednesday, what's on Wednesday gets kicked to Thursday, right? And so on and so forth. So tomorrow obviously is a Wednesday. We normally get those weekly inventory report tomorrow for oil. We're not going to get that till Thursday at 11 o'clock. So not to worry, tomorrow is not the inventory day on crude oil, so to speak. On the topic of crude oil, though, you will notice that next Monday is the 18th. Okay, now why is that important? This is just for oil traders, by the way. Rollover. Around the 18th of the month, we get rollover. Now, in my experience, if the rollover's on a Monday, oftentimes it happens on the Friday before. So Friday the 15th, this Friday, the end of this week, we're kind of watching that rollover closely here on the crude oil. We're nowhere near it right now, but by the end of the day tomorrow, Thursday and Friday, we'll probably start seeing that December contract lose some volume and start moving over to January. Can't believe we're already talking about the January contract here on crude oil. So just some food for thought here as we go into the rest of the week. We're probably looking at rollover on Friday. If not, worst case scenario, it'll be on Monday. That's not going to affect us too much here for tomorrow. What will affect us tomorrow, two big things tomorrow. First thing is we got CPI. Consumer Price Index. Now, CPI, right? Consumer prices. When I think of consumer prices, I think dollar. When I think dollar, I think gold. So gold is definitely going to be something you want to be tuning into tomorrow morning around that 8:30 Eastern Time CPI number, right? That's the big news for tomorrow morning. Then, as we go into lunch, we've got Jerome Powell. He's going to be testifying tomorrow and Thursday. Tomorrow at 11 o'clock. Thursday is at 10 o'clock. I'm not sure why they have those an hour different, but I did confirm them on multiple website resources. It does look like tomorrow is 11 o'clock and Thursday is 10 o'clock. How does that impact us tomorrow? Well, the big thing is you have to, I would anticipate markets like the S&P and the NASDAQ could be a bit range bound tomorrow. And this is a really important heads up because we already know, and we'll see the charts here in a moment, but it already looks like the S&P and the NASDAQ might be setting up for ranges tomorrow, and I'll show you why I think that here in just a few moments. But that 11 o'clock, that is not just a speech. It's not something, it's not some fun and games. It is a full testimony on Capitol Hill. I believe tomorrow is the banking committee. I'll have to double check, but the reality is that will be kind of a market paralyzing event tomorrow. It's at 11 o'clock. I'd be lying to you if I told you how much it will paralyze the markets. Sometimes, and I don't think people are, I think the markets have pretty much understood there's no more rate cuts this year, right? If there was still lingering, if they were still kind of wondering, will they cut rates in December, I would imagine tomorrow's Powell speech or Powell testimony would be very much a market kind of suspending event, right? Or paralyzing event. But because they got that last cut out of the way a few weeks ago, I don't anticipate the markets are going to be hanging on every word that he says tomorrow morning, but they definitely might be. And so you need to be aware of that. If the markets are going sideways, 9:45, 10 o'clock tomorrow, you know what's happening. What'll usually happen is you get that CPI number at 8:30. So what'll usually happen is that number will come out. We'll get through the opening bell on the U.S. Stock Exchange in New York at 9:30, and then usually about 10:15, 10:30, things will start to look really range bound as we go into lunch. Again, it could be 10:15, could be 10:30, it could be 9:15 tomorrow morning. We won't know until we get in there, get our hands dirty as far as how much these markets are really going to be waiting on him tomorrow morning. Might be early, might be late. We might not even get much of a blip at all, right, from him at all tomorrow. So again, because I don't think the markets are going to be as obsessed with him tomorrow as they would have been if they hadn't cut rates yet in the last cycle. Now, speaking of obsessed, the known unknowns for tomorrow, the U.S.-China trade deal, right? We heard from U.S. President Trump today. He, as always, did talk a very kind of stern. He had some very stern words. He used the word cheating, right, for China and in their relationship with the U.S. So tomorrow we'll see. We didn't hear much of a response from China this afternoon. We'll see what happens here out of Asia. The markets continue to be obsessed with this phase one trade deal. It is a known unknown for tomorrow. We may get some big headlines regarding the U.S.-China trade talks. If we do, we don't trade the news, but we'll simply trade the reaction to that news. So we will be keeping our eyes open on that. It sounds like Brexit is under control here, at least for now, until their elections later on this year. So it does look like tomorrow it's all about Powell as we get later in the morning. And again, the known unknown will be, when will that next big tweet go out, or that next big announcement go out regarding phase one trade deal. You and I both in the same shoes on that one. We do not know when, but it is a known unknown for tomorrow. Now that you guys know the plan for tomorrow, you know what we know about, what we don't know about. Let's get to some charts tonight. Let's get this video, right, cranking along here as we go. I got some oil, some S&P, some NASDAQ, and, of course, some gold. I'm starting off here first tonight, though, over on the oil. Oil is for the most part here, a relatively simple overall plan right now. I've got that bull market, obviously, right, that bull market running higher. And then we got some lower highs, we got some higher lows, and we pretty much opened up this morning right inside of a nice little triangle, right, or a trading range. Now, triangles are really, really important. I mentioned this in the introduction. Triangles are important because around the swings, right, the major turning points of this triangle is usually where you're going to get, right, the most reliable setups. And you can see right now, right, we go up to the top of that triangle and they take it back lower. We're not quite there yet, as you can see below that triangle, and I have to assume there'll be a lot of buyers here right now waiting down around that area, because again, the swings, in my experience, it's those swings that really are where you want to be waiting here, right, for a triangle, right? So when you have a triangle, mark those swings, Okay, and then again, buy low, sell high, right? We go up, sell it back down, we go down, buy it right back up. There's another big clue on this chart as well, and that, of course, is the actual range itself. That range, you'll notice, if I kind of widen this thing out a little bit, that range, if you notice, what does a range tell us? Range tells us to buy low, sell high, right, and avoid the middle. So when I get that range, what I can do is I can copy and paste it up, find levels of resistance, and I can copy and paste it down, and I can find levels of support. You'll notice that level of support, where is it? It's right around that low swing on that triangle. That's a second really big clue here that tells me that area down there at 56.40 is a very desirable spot there. Third big clue here, third clue, strong move down. Anytime we see a strong move down, we know a measured move is certainly likely. I've got that measured move now sitting just underneath, right, the high of that battle zone. That's the third reason now. You know, we got the swings off the triangle, we got the range expansions, and we have that measured move. All of that now, right, is pointing towards that 56.25. The one thing I don't want to do is I don't want to get wrapped up trying to trade inside the middle of this trading range. So we know the market is overall bullish. We've got that bullish tone to it, right, going into that range. I want to be a buyer and want to buy low. I know where I want to be a buyer right now. What's the best entry pattern as we try to buy off of this low? My favorite pattern in a range-bound market is to look for one of those failure into pullback combinations. In other words, I'd like to see us make a run lower. I'd like to see us pull back to the moving average, get the sellers now to try to sell off the moving average, okay, thinking that this is a breakout of some sorts. Once I see those sellers now coming in and selling off that pullback, now I know exactly where their stops are, right? I know exactly where their pain points are. That's the most important thing. That's where the pain begins. That's where the sellers now have pain. What I'd like to do is buy right into those stop losses and then try to grab that pullback before we get back into that range. These are my two favorite or my favorite combination setup, I should say, in a range-bound market. The key first is we're trying to buy inside the buy zone, right? We know where that buy zone is. It's around the swings. It's around the expansion levels. The measured move is there as well. So now all we need is we got to get down into that area. Now, once we get down to that area, we know there'll be buyers waiting down here to buy it back up into the range. We're not going to tell that, though, to the sellers, are we? Keep that between you and me, because we want those sellers to come in and try to sell off that pullback, because once they do, now we know where the stops are, and we can buy off that pullback, right? We can buy into their stops, and we can buy that pullback. This is what I call a failure into a pullback combination. Failure pattern first, into a bullish pullback pattern as we make a run going back into that high. Now, there is a possibility that we may not get that much of a pullback. You know, you might have noticed here, we actually did hit that swing. There is a chance here we might end up running back up into that range. And if that's the case, all is not lost. I can now use another one of my favorite setups. This one is a little bit more aggressive, which is why I need to see. Remember, I don't want to trade inside the range. So instead, what I'll do is I'll look for a trap. Now, this particular setup, if we get this, is a really reliable setup. It's called a nested failure pattern, right? The reality is, if I try to buy right as we go back up into that range, I'm now buying high. I'm buying towards the middle of that trading range. I don't want to do that, right? I want to buy nice and low. And what I'll do is I'll look for that prior swing right below that low to be a buyer, staying out of the middle. Remember, focusing on the edges and making sure we buy going back up into that trading range. Now, what if it really takes off here, right? What if it really takes off? Can I sell this? I mean, it's a range, right? I mean, can't you sell the top of a range? You can, but what's the best way to sell in a bull market? We need to see a reversal pattern. And my favorite reversal pattern here would be a 1-2 crown reversal. Now this is assuming that the market just kind of runs higher here, goes back up, maybe double tops up there, whatever the case may be. Can I sell this market back down again? You absolutely can. Again, you want to sell high in a range, but we're too bullish overall. So if we run higher here, I can't just, bottom line is, I can't just use your standard, I can't just wait for them to buy the pullback and sell into that low. I could do that if the market was bearish, right? I could sell into a bullish pullback failure off that high. The problem though is, if this thing runs through that high right now, I just simply have to respect the momentum of those bulls. I'm going to let them try once. They're probably not going to give up after just one try. They'll probably go lower, try again, and that's what I want. Now that I've got those buyers now all roped into that position, now I wait for a trap high. I look for a nice strong signal. I make sure I'm not trading inside the range. Again, that's the one caveat here. You want to sell high above the range. Okay, look for, what I call a crown reversal pattern. Now, you might be wondering, well, what if we don't go straight up like that? What if we just kind of sit here for a while inside the range? Then what do I do? Well, now what I can do is I can look for a lot more relaxed pattern now. We're still bullish overall, but now if we do sit inside of a range for a while, that will kind of mop up a lot of that bullish momentum. It won't be as bullish any longer, and therefore I can look for just your straight nested failure as long as I'm not trading inside the range. Do you see the difference there? Okay, one of them would be we go straight up. That is a bull market, right? I don't want to mess with that too much. I want to see him try once, twice, and get a trap high. This is a very conservative reversal pattern, right? That trap high makes it very conservative. But if we just sit here for a while and go sideways, at this point, right, the market's barely bullish. If I jump higher, I'm just going to make sure the buyers try once, try twice, and then I'll sell it going back down into that trading range. Now, what about a breakout? What do breakouts look like? Now we know how to buy it. Now we know how to sell it. Okay, what's a breakout look like? First of all, a breakout going lower. What's the pattern? The pattern is a 1, 2, 3 breakout, right? Put an exclamation at the end of it because breakouts need to be on strength. 1, 2, 3 breakout. Very, very strong breakout. What does a 1, 2, 3 breakout look like? 1, 2, 3 breakouts. They first start off with a strong move down into a support area. We then, moving average comes over, we pull back to the moving average, and we jump off that moving average. Okay, now in this case, that jump off the moving average, that's a 1, 2, 3 breakout. Strong move down, that's 1. 2, pull back to the moving average. 3, strong move off the moving average. Once we get it, now we know we have a breakout. I'm going to mark that low. I'm going to find my hidden channel now. See what I'm doing? I'm marking those lows down here now. I'm going to plot my hidden channel now, and I'm looking to sell off the top of that hidden channel. That's a 1, 2, 3 breakout as we go lower. That'll be the most reliable way to reverse the trend and qualify the breakout. Now, as we go higher, though, there's actually 2 types of breakout patterns you could use. Because the market's already bullish, I can be a little more aggressive. For example, if I see this thing really take off, right? If it really takes off, I can now look for what I call the 2-try breakout pattern. That's 1 try for the bears, 2 try for the bears, and I would recommend, because it's a range, I would recommend a trap low on this, especially since we know we've got some key levels of resistance waiting overhead. Because, after all, a trap pattern, right? Traps are always my favorite entry setup whenever I'm concerned about any overhead resistance. So we definitely have to be aware of that overhead resistance. Most important thing right now, though, is going to be, it's going to be a very strong move higher. It's going to be a real strong move. The second thing is, it's got to be higher highs. Right? You got to get some higher highs on it, because when you get some higher highs on it, you'll have sellers scaling into that move. That's what's going to happen, right? And then if we can pull back, I can now look for that trap low. That trap low is a beautiful setup here. As long as strong move up, higher highs, trap low, I don't want to say the word guarantee. The word guarantee really shouldn't be in my vocabulary as a human, let alone a trader, but that's almost a guaranteed winner if you get the strength going higher. Obviously, too, the 1, 2, 3 breakout is also in the cards here as well. It's not necessary because we are already bullish, but that will not stop me from drawing that trend line, finding that hidden channel, and looking for that buy up into that measured move. Just make sure though you get that entry before we get to that measured move, because that measured move, we might run all the way up to it, start going sideways. We may have a brand new range to work with tomorrow. We might be looking for a 1 try, 2 try failure, those failure patterns that I mentioned earlier before, right? Remember how I mentioned that failure pattern before? Same idea, except this one will be below a range above us. So we know the market, again, is overall bullish. We know we've got some levels of resistance that we're watching here overhead. I want to buy low. I want to sell high. Because we have that momentum on the side of the bulls, though, I've got to be very careful being a seller, even if it's at a level of resistance. All right, got a good plan put together here now for oil. I got to keep going there because I got more to cover here tonight on the video. But if you want a deeper dive into the entire trading strategy, my 4 favorite entry patterns, my 3-step trading strategy, hundreds of hours or hundreds of examples, I should say, of how we apply this strategy to our favorite markets, grab that free trading course I've linked up in the upper right-hand corner. If you're here on YouTube right now, right, grab that link in the upper right-hand corner. I'll also put all the links in the description of the YouTube video, or there'll be a big red button for that registration below the video tonight on our trading blog. So don't forget, I've talked a lot about failure patterns and pullbacks and nested failures and crown reversals, right? We've talked a lot about the patterns. I want to give you a deeper dive into those patterns, so make sure you grab that free course linked up either in the upper right-hand corner in the description or below the video tonight on the trading blog. In the meantime, let's keep this party rolling here. Over on the S&P. S&P keeps pushing higher here. They, came out the gate this morning and ran straight up to that big round number and then came all the way back down to where they began. And that is a very big clue. Let's take a look at the bird's eye view here, right? You can kind of see how the bird's eye view is set up right now. We got that move up. This is kind of what you want to pay attention to right here. We've got that move up, that pullback, that higher high. I'm sure a lot of people are looking at this as a hidden channel, right? It's that hidden channel right there, and I'm sure there are a lot of folks who are really patiently waiting for if we can get down into that 2075 area, 3075, excuse me. 2075 is so 2018, right? We're now well above the 3000 level here going into 2020. Still can't believe we're talking 2020 and the month of January coming around the corner here. But I would imagine that is definitely something on the radar here for those long-term bulls. As you can also see though, right? I've also got that measured move, measuring that up. And that up, it'll give us that major measured move, right, waiting there overhead. If we dig in a little bit deeper, right, we dig in a little bit deeper here right now, you can see a very similar pattern to what I just described. We go up, we pull back, we make that higher high. I'm sure a lot of folks will be drawing a trend line off that high, bringing it down to that low. And you can definitely see that buyers are trying to come in and buy off of that low. Very, very similar situation. And that, of course, is giving us that battle zone, right? That's why I've got those 2 battle zones on here. One is higher on the chart than the other. You can also see here I've got 1, 2, 3, and then dare I say it, 4 legs higher. Now, anytime the number 4 comes out of my mouth, you always know this is major resistance. And you can see it's right up around the round number. It's right up around today's highs. Multiple measured moves there overhead. So I think it's probably a good idea not to go trying to buy if we do end up back around that high. I would not be buying that high, but I would definitely be looking to use that big round number and that measured move as a target here for the S&P buyers. So we know the market is overall bullish, but as I mentioned, in the introduction here, there's one big kind of elephant in the room, and that is that big push lower, right? That big push lower. We have this market. Now, this is where it really helps to go back and really think about how the day began this morning. If you're with us this morning in the trade room, what happened? The market opened up and it was lifeless. When we came out this morning, 8 o'clock Eastern time, we opened up our trade room, there was less volume on the S&P than there was on the crude oil. Right? Crude had more volume than the E-mini this morning, and that was a real big giveaway. The market started off instead of a real narrow range. Now, what do we know about ranges? Usually ranges go up and come right back down. They go down, they come right back up. Look where we are right now. Okay, that is a pretty good clue. That's a pretty big clue. We definitely saw this market jump. We had this kind of melt up, as we call them, right? This melt up where everybody piled on. The market shot up to that big round number. And you'll notice it didn't last very long. It went to a 1, 2, 3 reversal. Mark up that low, mark up the high. There's your hidden channel. And it dumps right back down. And this is exactly what a 1, 2, 3 reversal into a hidden channel pullback looks like. The same stuff we talk about virtually every night on this newsletter. So you can definitely see that they got what they were looking for and sold it right back down in. And again, I can't get over the fact that we're sitting right back inside that trading range. If you would have told me at 10:30, 11 o'clock this morning, we'd go all the way back down again, I would have laughed at you. I would have thought that I would have thought we'd have stuck up here, gone sideways up here, and I figured we'd be ending the day around that big round number. So it's very obvious that move higher to that big round number was really just the fear of missing out. And I think the markets were kind of disappointed when they didn't get much more news to really salivate over here from President Trump today in his speech at the Economic Club in New York today. So we know the market's back to where it started, right? Now, my big question for tomorrow, really the kind of the $1 million question is, we know we've got Powell coming tomorrow morning. Do we just sit inside this range for a while? Or do we at least get a shot here for a crown reversal? Right? Because a crown reversal really is what I think is going to be the best spot here for us in the short term. We're at the low of this, this channel. We're at the low of the channel. I'd like to be a buyer off of that low, but there's one big problem, right? That strong move down. Anytime we see a strong move like that, we're probably going to see another leg, right? We probably will. So I don't want to just try to buy into it. I've got to anticipate those sellers are going to try to make that move lower, and then I can be a buyer going up from there. They might even take it and continue it going down right into that battle zone. So how do I buy off the low? How do I buy a market that has a lot of bearish momentum? The one pattern that I like, and we talked about this earlier on the oil, is I like that crown reversal, right? We pull back to the moving average, we go higher, right? Let those sellers now try twice. We got them once. We're waiting for twice. If I can get this to trap low on this is a pretty good setup. And this will happen here, obviously, in the overnight, most likely. If it does happen, it'll be in the overnight. So if you're in Asia, if you're in the early parts of Europe, this is something to keep your eyes open here for tomorrow. I like this pattern because, again, it focuses on buying off the low of that channel. It also helps me to avoid overhead resistance. We talked about what is the best pattern to avoid buying into resistance? A trap. And that's exactly what that will be. Again, this is called a crown reversal pattern. I want to be a buyer, but that strong move down is just simply too strong. And since I've got that trend line coming down, a trap will really be your best fit here for a short-term buy. Now, what if they keep it going? Right? What if they really run it as we go lower? Honestly, I'm not going to really change my opinion very much. I'm going to look for the same basic pattern because, again, we're at the low of another big range. This time, though, again, let those bears try once, let them try twice, and looking for, again, that crown reversal, right? That crown reversal. 1, get it right there, 1 and 2, trap low, and go from there. Now, we might not even get the crown reversal. You know what I mean? We might just run lower here. Moving average comes over, and we might get just a 1, 2, 3 reversal. We might be buying off that hidden channel pullback. So, don't forget that hidden channel or that 1, 2, 3 reversal may happen as well, right? It may plumb those lows overnight, right? Run down overnight, moving average comes over, and it may just take right off again, right back above it and jump. At that point now, mark that, right? Mark that high, find that hidden channel, and we're buying off that hidden channel low. And again, this is the same exact pattern that we saw opposite direction earlier on. We go up, the bears go 1, 2, 3. What do? We mark the low, find that, right? Find that channel, and you're selling off top of the channel. It's the same idea, just different direction, right? Same idea, just different direction on that. So that is definitely something we're watching here, right, for tomorrow as well. So one would be a trap, a crown reversal off that low. The other would be we continue going lower. We're definitely bearish at that point, so you want to let them try once, twice, trap low, and then buy. Again, we call it a crown reversal. But also, too, don't forget, it may just bounce and just run back up. And if that's the case here, we'll definitely be grabbing that and using that now, right, as our new channel. Now, there's one big thing though we have to keep in mind here for tomorrow, and that is trading ranges. But I'll tell you, there really are three different ways this market could get stuck in a range tomorrow. The most obvious one is this one right in the middle. So if we get stuck inside this range here, and you'll know it, right? We won't go very far. He'll be trading sideways here. If that's the case, at that point, it's pretty much a neutral market. We've got the bears taking it lower, the bulls taking it higher. So at that case, if we get this thing going sideways here in the overnight and we're not getting much momentum here, obviously I want to buy low, sell high, and avoid the middle because it'll be a range. What's my favorite pattern, my favorite setup in a range bound market? We call them 2-try breakouts, or 2-try failures, I should say. So if I have a range here, and if we get stuck inside that range, what you want to do is you want to use the 2-try rule to buy low, sell high. So as we go lower, 1 try, wait for the pullback to the moving average, right? 2 tries, and then we'll buy back up into those stop losses. Same thing is true if we go higher. Again, this is all kind of prerequisite is it goes sideways here overnight. If it goes sideways, again, that will kind of mop up the momentum. At that point now we can use a 1, a 2. Again, let those buyers try to take it higher. What's going to happen is, keep in mind, guys, remember, there's a lot of rookie traders out there that are not trading with a plan. They don't have the discipline yet. They're not patient enough. And a lot of rookies are going to get trapped trying to buy that breakout pullback. That's your opportunity to capitalize. I know it sounds bad. You're kind of waiting for those uneducated traders to get stuck in the wrong trade. But we all have to pay our tuition somehow. Rookies got to learn, and while they're learning, it might as well put the money in my account. I paid my bills, so to speak, my tuition bill when I was a rookie. Everybody has to learn. But remember, right, you've got a plan because you work with me. A lot of people, believe it or not, go out in these markets every day, and all they're doing is chasing after patterns, chasing after signals. They got too many indicators, too many time frames, too much stuff going on in their head, and they get roped into bad trades quite a bit. Look for trades like that, those breakout pullbacks. Those will be easy to fade back down in. Another one I want to be watching for is if the market runs higher here, right? If the market runs higher, keep your eyes open for that 2-try breakout. If we run higher here, back to the big round number, we know they're trying to go. Watch for that 1, that 2, and that trap. So if we do get that run higher, right, without a pullback here, watch for that strong move up. Wait for the bears to try twice, trap low. Beautiful setup. But again, don't forget, that's going to be a strong move up, right? Very strong move up. Buyers take profit, higher high. Bears come in, try to sell it. And we look for that trap low here, and we're buying right below that trap low. But don't forget, though, it may run right up and go sideways up here. And if it does go sideways up there, right, the longer it stays pinned to that big round number, the better off our chances are of buying it as it pulls back. Now, again, what's going to happen is the market will shoot lower, and it will look like it's going to reverse, right? But it probably won't if it sticks up around that big round number. Wait for those again, we assume they're rookies. They might not be rookies, right? But these are the uneducated, inexperienced, undisciplined, really, right? Traders who are going against the trend. They get roped into that short off the breakout pullback. Once they fail, right? When they fail, they will most likely fail there. They don't always fail, right? Sometimes they do hold, right? Sometimes they do hold. And if they do hold, what do? We mark the low, we mark the high, and we sell off that high. So in the case where the sellers do hold here, if they do hold and jump off of that low, perfect, great. I don't care, right? I'm not married to any direction here. I could care less what direction we trade in. All I want to make sure I do, though, is make sure I'm going with the momentum we have right now. The third and final range here for tomorrow is if we make a run going lower and we get pinned down around these lows. I don't anticipate this, but it is obviously, right, kind of where this, if you look left here, right, there is kind of this, rangy area back there, 30.75. So, if it does happen that way and the market makes a big run lower and it kind of just sits here for a while, you know what I mean? I'm not going to want to buy that because remember, the longer we sit there, the more bearish it becomes. You got to remember, the longer a price is at a price level, it's called acceptance, right? Market profile theory, auction market theory. If you understand the way the markets work, the longer they stay there, think of it this way. The more trades, the more volume being executed in that area to keep that market pinned down is like another vote being cast for those sellers. So in that case, I'm looking at a bear market now into a range. I want to sell high above a range. I'll look for the one try, the two try, right? That buyer failure pattern. Let those buyers try to buy that breakout pullback. They're probably not going to be successful, and we'll sell it right back down in. Now, if they are successful, again, we're not playing sides here. We're just trading momentum. If they are successful and it runs higher, if they do get it to run higher here, good. Now we know it's a bull market. Mark up that high, find that hidden channel, and we're buying it on the way back up again. So no magic here needed. Just know what momentum is. Again, right now, momentum is very bearish here in the short term, so we do want to look for that trap low. Watch out for those ranges because, again, Powell, right, tomorrow, Hurricane Powell coming through at 11 o'clock Eastern time. And again, like I mentioned earlier, right, I've got a much deeper dive into all of these patterns for you inside that free trading course. If you're here on the blog at Sideways Markets, I'll put the link below the video tonight on the trading blog, or just dig into the description of the YouTube video, and you'll find all the information there. Over on the NASDAQ here tonight, NASDAQ's in a very similar situation to the S&P 500. It does help take a little bit of a bird's eye view of what's going on right now. It is pretty easy to see this market is bullish. Again, like I said in the introduction, it's difficult to call this a bear market considering it just hit the all-time highs again. So we'll call it a bull market. Really the big thing right now, though, you've got this big move up. Mark up those highs, mark up these lows. It does look like there is a semblance of a channel here, right? Will that drag us down all the way to that battle zone number 2? I couldn't tell you yet. We'll know more tomorrow, obviously, especially since we got some big news from the CPI number tomorrow morning. It could. We zoom in a little bit closer here. Oh, one more thing, too. I also want to mention, too, here as well. If you really zoom out on this, you'll notice these are all symmetrical, right? All of these legs, 1, 2, 3, 4, they're all symmetrical. And that, of course, puts a big level of resistance there just overhead at that 83.10. As we zoom in closer, though, you can see a very similar chart pattern. Markets, of course, are fractal. The same patterns we see on slower time frames will also appear on faster time frames. We get that big move up, 1, 2, and 3. I'm marking up that trend line there off that low. I think it's pretty easy to see there could be buyers coming in to buy off of that low. So these are all, relatively easy channels to find if you know the basics we teach in our intermediate classes regarding channels. You can see as well, too, very symmetrical. 1, 2, 3. I would expect that next leg 83.18. So, as we mentioned on the S&P, this whole area right there, probably not going to want to be buying into resistance. We definitely want to try to buy at support. I definitely want to use that 8,300 as a target, but I don't think it'd be a good idea there to be buying as it goes. My biggest problem, of course, I know we're bullish overall. My biggest problem, though, is that, again, the big elephant in the room right now is that big move down. Anytime we see a big move down like that, we know we're gonna try to get. Well, we know the buyers will try. Sorry, the sellers here will try one big shot, take it lower here. My biggest thing right now, though, let's get this moved down underneath there. My biggest thing right now, though, is again, we opened up this morning's session stuck inside of a range. Okay, that range, what does it do? It goes up and comes right back down again. So as you can see there, quite the interesting situation where it starts off in a range, finishes pretty much in a range as well. So that's kind of a big clue we're watching here to see if this thing goes into that range here for tomorrow. So I do want to be a buyer on this. It is overall a bull market after all. That big move down though, I really would like to combine a trap low below this range, right? This is the range from earlier on this morning. I don't want to get too aggressive on this and try to be a buyer too aggressive on this. I think what I'll do in the NASDAQ here is you'll notice how I have that drawn right now, right? If we can get that trap low down there, I'll bet there are a lot of buyers here who are drooling over that crown reversal, right? Again, I call it a crown reversal. Really what I want is I want to get underneath this range. On the S&P, we can slide right underneath that range here. You know what I mean? There's the range on the S&P. So if I can get underneath that range, I'm a happy camper there. On the NASDAQ, I have a little more difficult time getting underneath that range. The range is right there. So for me, I've got that strong move down. This one try, I'd like to get that trap low. Allow me to, after all, if it is going to be a range, buy underneath that trading range. This is the same pattern we talked about in the S&P. It's just in this one, I want to be a little bit more precise, make sure I'm getting that buy underneath that trading range. And again, we call this a crown reversal pattern, right? Crown reversal pattern to buy underneath that trading range. We also know there is potential we may make a run going lower, right? That bigger channel we know is patiently waiting for us right down at these lows. Remember, if we do get that run lower, I'm still going to be looking for a 1, a 2, and a move back higher, right? Same basic plan on the NASDAQ as it is here for the S&P 500. I'm still looking to buy off that low, but remember, I can't just buy it, right? You've got to look for those bears to try once, try twice, and really you want to get that trap low to be a buyer off of that low. Also, to remember too, if it runs and goes sideways down here, remember, that's the big caveat. If we go sideways down there, now we know for whatever reason the market's bearish and it's just pinned, right? Those bears have the bulls shoulders down, right, on their back, pinned to the mat, and they can't get up. In that case, the bears have full control. We look to sell above it. 1 try, 2 try. We're looking for that, again, looking for that buyer failure, right? Wait for those buyers now to go up. Let those buyers try to buy that breakout pullback, right? Anticipate where those rookies are going to get in trouble. You know better than buying that breakout pullback, because that breakout pullback is probably not going to hold. And if it does hold, then so be it. If it does hold, just be happy you know what a reliable trade looks like. If it does hold, mark up that new high, find that hidden channel. We'll get a pullback, right? We'll get a pullback. Remember, we don't optimize our strategy based on the number of trades. We optimize a strategy based on the probabilities of the trades that we take. We want reliable trades. More trades only means more commissions. Your broker will love you for it, right? You'll be a home run hero, right, for your broker, but you will not be a very profitable trader if you're taking every single pattern that you see. We're not here looking for patterns. We're here looking for the right patterns. So again, the right pattern for me right now is that crown reversal. underneath that 82.5 area. If we do get that next leg lower, 1, 2, crown reversal off of that low, or do we pummel lower and go sideways down here? If that's the case, make sure you stay away from that range. Try to sell high, buy low. And again, my favorite patterns are those failure patterns, those 2-try failures, right, as we go. What if we sit sideways inside the range here tonight? Again, what if we just kind of go sideways inside of that range? If that's the case, if that's what we get tomorrow, again, we got Powell tomorrow morning at 11 o'clock Eastern time. If that's the case, that's fine by me. The market at that point will be very neutral at that point. That means, of course, I can buy low, 1 try, 2 try, back up in. I can sell high, 1 try, 2 try, back down in. And again, think about it as, I call it the 2-try rule. But really what you're doing is you're waiting for the breakout pullback to fail, right? That's what you're doing. You're waiting for it to go higher. And again, I call it the 2-try rule because the way I teach to my clients, I always encourage them, make sure you can see 1 try, pull back, 2 tries, make sure you can actually see those 2 tries. And then obviously, right, same thing the downside, make sure as they go lower, you can actually see those sellers trying once, trying twice. What that does is it ropes in all the breakout sellers, it ropes in all the pullback sellers, and when they fail, the price will snap right back up into that trading range. That's going to be your best strategy if it goes sideways here. Now, what if it traps and runs? Right? What if it runs? If it runs, 1, 2, trap low and go. We pretty much know where they're trying to go at that point, right? They're trying to get a retest of that measure move, trying to get that big round number hit again. So if we do end up getting a really shallow pullback and it runs, look for that little grind, right? Again, I call it a 2-try breakout. I always kind of joke around and call it a FOMO breakout. What you want is you want that very strong move going higher, right? Real strong move going higher. You don't want to buy high up there. What we want to do though is wait for those, right, 2 tries. 1 try for the bears, 2 try for the bears, higher highs, right? And then of course you want to buy that trap low. You want to make sure you get that though before we get back up to retest the high. See, we saw a similar pattern over here, right? But this one already got where it was trying to go. It already got to that big round number, and it's no surprise. It shouldn't be a surprise. The buyers failed, right? There was nothing left to achieve. The buyers already got what they wanted, right? You don't want to make that mistake over here. So remember, really more than half the battle is knowing where is the market trying to go. If it runs higher, it's trying to run back to retest the highs, which happens to be a big round number. You want to get into that pattern before you get there. Right? If you don't, it may end up going sideways here. It may reverse too, for all we know, right? But imagine it goes sideways up here. At this point, if it sits there for a while, look for that 1, that 2, you got it, right? Look for that 2-try failure pattern to buy underneath that low. As you can see, anytime I find a range, anytime the moving average flattens out, anytime I start seeing double tops and double bottoms, that's when I know we have a range, and I know that ranges are notorious for failed breakouts. That's why I always love range-bound markets. They're very, very easy to trade. So NASDAQ looking great. I like the NASDAQ. I want to see us get a little deeper pullback here, right, and buy underneath that range tomorrow. Last but not least here, I know we're getting late here in the video. And by the way, if you're watching this video right now, hit that thumbs up button for me. Type in the comment section. You are part of the 1%. If you're watching this far into the video, I'm almost an hour into this video right now. I'll tell you right now, if you're watching this far into the video, most people, the people who are not going to be successful, they've already quit on this video by now, right? Because anything that's less than 2.5 minutes, right, they're not going to keep watching. If you're watching right now, though, right, hit the thumbs up button for me. More importantly, though, type in the comment section 1%. I'm the 1%. Right? I want to see how many people are actually watching this all the way to the very end. How many 1%ers do I have on this video right now? Because you guys and gals, the ones who are watching this 57 minutes into this video right now, you are the ones who are going to be successful in whatever you do. It's just a matter of time. If nobody's told it before, right, I'll be the first to tell you that right now. You're a very special individual because you are doing what you need to be doing to learn these skills to be there, right? I always kind of laugh when somebody says, the video's too long, and I think, not if you love this stuff, not if you're serious with this stuff, right? If you're really serious about this, the video's not long enough. There's a lot of knowledge, right, that I share every night in this newsletter, and if you guys are here all the way to the end, right, kudos to you, and cheers to being part of the 1% group. I want to see how many folks in the comment section are part of that 1%. In the meantime, though, right, let's grab some gold here. Let's grab some gold. What's happening on gold? We know we're bearish, that's for sure. Run lower, 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 lower. But again, right, what else do we see here? Range. And anytime we have, in this case, a bear market into a range, what do we do in a range? We buy low, we sell high, and we stay out of the middle. We buy low, we sell high, and we stay out of that middle. Now, we know the market's bearish, so obviously I've got my range right here, right? I want to sell high, and I want to buy low. What are the best patterns to do that? What's the best pattern to buy low and sell high right now on the gold? Well, to sell high, in most situations, you're going to look for that breakout, that pullback, and that failure. Right? In most situations, it's a buyer failure and we're selling off the high, right? How do we buy off the low? We buy off the low by using that nested failure. Remember that one, right? We give the bears the benefit of the doubt. We let them try once, we let them try twice, and once we see them try twice now we know all the sellers, right? The conservative sellers, the more disciplined, more aggressive sellers, they're all roped in, and we can buy after we've got that second try from there. So we know right now we are above the top of the range. I want to be a seller, and I should be able to, right? I should be able to sell into a buyer failure. But there's one big problem. There's actually two big problems here. The first problem is, look at the strength of that move going higher. That does not look like it just kind of found its way above, buyers tried and failed. No, that doesn't look like most of these, right? Look at this, right? Look at this. We go up, right? Buyers try and fail right down. We go up, buyers try to fail and right back down, right? Now look what happens though when a market tries to go really, right? When it really punches higher. It's not going to give up that easily, right? It's not going to give up that easily. They're going to try once. They're going to try twice. They're going to keep on, right? They're going to keep on trying to send that market higher. That's the big clue. The big clue is this thing is looking pretty bullish right now. And because it's looking pretty, you know what I mean? It's not looking like it didn't just come out of the range and then all of a sudden up. No. This is a pretty bull move here as we go higher. Now, they might be trying to get that pendulum swing. You know, pendulum swing is, you know, in the pendulum swing, guys, the pendulum swing should not be taken too literally. You know, the pendulum swing right now is about 61.6. You know, give it a good 5-6 tick buffer. It's not going to be exact. It doesn't need to be, so don't worry about it being exactly, you know, the pendulum swing. This is close enough. So I don't think the pendulum swing is the issue. I think the big problem is, got a pretty strong move higher. And so anytime I have this much momentum going in one direction, what's the best way to sell a market like that? One try, two try, back down we go from there. There's one more problem though, and that is the range. What does a range tell me? Buy low, sell high, and then what? Avoid the middle. Okay, here's the problem. From what I can see, it's going to be very difficult for me to get a good risk-reward ratio on that range right now. Because if I sell, right below that low, I'm pretty much right back into that range, aren't I? And the reality is, my risk to reward on that trade's not going to be very good. What's the most effective way to get a good risk-reward ratio? Buy low or sell high. Okay, what's the best pattern to sell high? A trap, right? Trap pattern. So is it safe to say that I could avoid both of these problems by looking for a nested with a trap, also known as a crown reversal? Absolutely. And that's exactly the pattern I'm looking here for tomorrow. Now this pattern is something new. This is nothing new, right? No. This is a pattern we've talked about many times already. This is the two big reasons. I want to be a seller. I just don't want to sell inside the range. And I don't want to sell too aggressively when I've got so much strength, whipping around from the side here, right? For all I know, this will hold and keep running. So I want to avoid trading too close to the range. because there's no good risk-reward ratio there, and I want to, right, avoid getting too aggressive here. That solves both these problems. Right? That solves both these problems. The nested failure, the nested allowing the buyers to try twice will absorb momentum. The trap high is the easiest way to protect myself against getting trapped inside that range and being the victim of a stop and run. So crown reversal, or really, you could also call it a nested failure with a trap high. That's really what it is. It's a nested failure because of the momentum for the bulls. It's also a trap high because of how narrow that range is. Okay, so now we got a pretty good plan here of how to sell the top, how to buy that low as well. What if I'm wrong? What if it holds and keeps running? Then what do we do? Oh, perfect. Well, let's be honest here. There's one way it could hold and run up, and not jump. And if that's the case, I'll look for the 1, the 2, and the back down again. But let's assume, though, it holds and runs. If it really holds and runs, I now need to hurry up, find that high, find that low, and get ready for that pullback. Because that next pullback will be a beauty. That will be a wonderful pullback to trade. And again, we call it a 1, 2, 3 reversal. This would also be a 1, 2, 3 breakout too, right? 1, 2, 3 breakout and a 1, 2, 3 reversal into a hidden channel pullback. Now you always want to know where's my target, and I would assume that 1500 will be a big milestone here, but that's a world away right now. So I would assume right now the short-term target back at that 1474 area, right? That's most likely going to be where they're trying to hunt for. If they can get up to there, then we'll see how they go from there. Then maybe we make the run up into that big range we had just below 1500 here, right, for tomorrow. Now, what if it keeps going lower? Is it possible? Could it go lower? Absolutely it could. But what do we need, though? We need a 1, 2, 3. Yeah, 1, strong move down. 2, pull back to the moving average. 3, strong move off. That's what I need. Then I can mark that low. Then I can mark that high, find my hidden channel, and I can sell right off of the top of that hidden channel. Now, where would the target be on that? That's the hard part. We don't have a lot of targets to work with right now just because we're really at what is, well, I mean, look. There's nothing over here, right? So we're very much kind of lonely out here. So the key is going to be leave that runner, trail that stop, and obviously we'll do it together tomorrow morning as we get into our trade room tomorrow at 8 o'clock Eastern time. Speaking of the trade room tomorrow morning, and don't forget, guys, grab that free course. Again, it's linked up in the upper right-hand corner. I'll put all the links for you guys to get registered for tomorrow morning's trade room. I'll put them right in the description of the YouTube video. Or if you're on the website right now, right, head over to schooloftrade.com. If you're on the website right now, everything is available as part of the advanced course, right? Our advanced course includes all of our video classes, all of our trading sessions, all the ongoing support. Everything is all wrapped into one easy-to-use package. The advanced course is our premier. It's our most popular course, and that will include everything, all access, unlimited. Again, I put all the links to get registered in the description of the YouTube video. If you're on the website, though, I'll put a big blue button right below me tonight on the website. If membership is not quite right for you right now, at least grab that free trial right next to my ugly mug. Grab that free trial there. That will at least give you access to our free pass to our trade room, our free trading classes. So at least you'll get a deep dive into the strategy, right? And of course, you can register for that on our website. I've got toll-free phone numbers. If you want to call me in the office, I'm always here. Live support if you don't want to pick up the telephone. And as always, guys, drop those questions if you have any in the comment section below. Call me here in the office if you guys have any questions. And cheers for being part of the 1% Club here with me on the video tonight. I'm going to come back tomorrow morning. We're going to do it again tomorrow morning, 8 o'clock Eastern time in our trade room. Good luck with Mr. Powell tomorrow at 11 o'clock. If I don't see you guys with me tomorrow with the opening bell, and make sure you come back and join us tomorrow night, because tomorrow night we'll put the plan together with what might be the most difficult day of the week, and that is Thursday's trading session. So whatever you do, make sure you circle back around tomorrow night on the next edition of this nightly newsletter. In the meantime, though, get some rest, right? I'm sure you guys had a great weekend out there. It is always great to be here with you, but rest up, refresh, and we'll see you guys next time. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.